Worldwide markets this week. When will the markets crash? Are we getting upgrades from the rating agencies anytime soon? Optasia lists on the JSE, but no IPO pop. And SA vehicle sales, another very strong number. I'm Simon Brown. This is Worldwide Markets, episode 655 for 5 November. I am recording this just ahead of market open. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Shyft, thanks to Standard Bank. We did the Shyft migration video last week on Tuesday. If you want more around that, you'll find it justonelap.com/power hour. It goes into the details of the what, the hows, the whens. Importantly, if you haven't been notified, then you will be in the bunch happening next year, and that's because the Shyft app is not yet fully featured. Those are still rolling out. Go watch the video if you're an online share trading Webtrader ASI client. You'll get more details. But let's kick off with that Optasia listing. 2 weeks ago, I did a podcast totally dedicated to it, and I liked it, but I wasn't sure about the pop. I was worried about allocation. Then we saw F&B taking a 20% stake. I put an application in. I got 14%, which was exactly what I was worried would happen. I get a tiny amount. But then the actual deal itself, the listing itself, a bit of a non-event, I suspect. It really wasn't the giant sort of pop that everyone was expecting and hoping. And I think a lot of folks have been sort of a bit bemused by it. Was it a busted IPO? I mean, no. Look, it closed up, as Jean-Pierre Verster said on TV with me yesterday. You know what? It closed 2% up in a 2% down day. IPO price, 19 Rand. Stats for day one, opened 2075, high 2084, low 19 Rand, and close 1938. 2% down, 2% up, strong day. Not exactly the pop that everyone was looking for. But maybe that's lacquer, right? It gives us opportunity to get in. I only got 14%, and I would have liked the full allocation. So it gives me an opportunity to get to my full allocation. Folks, a number of people seem to be agreeing that the value's around 25, 26 over the next 2 to 3 years, and more in time. I mean, 25 at current, and then as they prove it out. That is their growth spurt period. I spoke about that 2 weeks ago when I did the podcast. Go listen to that if you want more information there. But the short answer is, it's listing. It wasn't as exciting, but I'm holding, and I'm not stressed. That sort of thing happens. Sometimes we get giant lists, sometimes a little less so, and so be it. You know, let's not overly stress. We'll see how it plays from here. Wednesday, and it's not yet open. Market's not yet open. We're expecting a bit of a down day. We might see a little more selling pressure in Optasia. Who's not selling is the existing shareholders and executive team. They've got lock-ins of respectively 185 and 360 days. We've got a webcast coming up on the 17th of November. 91 are listing 2 income-focused, actively managed ETFs. One will be local, the other will be offshore. They'll both be ZAR denominated. Of course, they trade on the JSE, but the offshore one will be backed into US dollars. We'll have a webcast, as I said, 10 a.m. on the 17th. You can register at justonelap.com/events. So we had more vehicle sales coming through for South Africa. That came in on, it would have been Monday morning. And once again, a strong number in the vehicle sales space. Now, this time it did seem to be, a lot of it seemed to have been the car hire companies sort of stocking up for the festive season. Be that as it may, I mean, we're not going to argue with it, but it is now the strongest number. So the September was the best since September 2015. The October at 55,960 units is the best since September 2014. So another really strong month in vehicle sales. As I said, a lot of it seems to have been car hire companies, but be that as it may, the vehicle retailers are certainly winning from that. So no arguments whatsoever. We also had an interesting article in Business Day on Tuesday, Bank of America implying that we might get a ratings upgrade. Remember, we got off the grey list, but we are still junk rated by Moody's, Fitch, and S&P Global. They've all got our sovereign rating as negative and below investment grade, junk as we call it. Although we have seen some upgrades on the outlooks. Our outlooks are either flat or positive. And the question then is, when do we start getting the upgrades? And the sense is that maybe we actually start to see an upgrade, particularly from S&P Global, during the course of November. Next Wednesday is the medium-term budget policy statement. The minister doesn't say much at that, but what he is probably going to tell us is we're getting more tax revenue than anticipated. Remember the giant bun fight earlier in the year? Yo, that was so long ago, where the two cancelled budgets because the minister wanted a 2% increase in VAT to get back effectively 60 billion rand in tax. He's probably got that from precious metals booming, most notably gold and, of course, PGMs. So he's probably got that money. Do we start getting the upgrade? I chatted with Martin Ackerman from Citadel on my MoneyWeb show this morning, and Martin was like, he's not so sure at all. He's not convinced that we're going to get necessarily a ratings upgrade just yet. But it is, frankly, the next thing that we are looking for is that upgrade and to see when it finally comes. And that's a biggie. Of course, we're 3 levels down. I think, is it 3 levels into junk? So upgrade makes us 2 levels into junk. It's going to take a while before we get there. But Kevin Links from Stanlib tweeted something. August and September saw the largest purchases of our bonds by foreign investors since record started in 1994. Over 30 years, that was the largest purchase of bonds. Now, a lot of foreigners can't buy our bonds because we're junk. Imagine if we weren't junk, how cool that would be. But we are, so we live with that. Let's have a quick check-in on gold. Down to 3,964. I was chatting with Pertley Radenhays on Tuesday on my MoneyWeb show, and he's saying he likes this. He thinks this is a space to be buying. He says things are starting to look better, and that around about this 4,000, this is a good entry point. If you missed the first run, here perhaps is your opportunity. My weekly chart doesn't say much. My daily chart doesn't is saying that, yeah, we do seem to be consolidating around the 3,950 to what's the top end of the about to 450. So let's call it 3,950 to 450. Typically, the consolidations have been closer to, well, the last one was $200 wide rather than just 100. But keeping a very, very close eye on that. We'll see how it plays out. We also got some trade peace in our time, but from Trump in South Korea with China. Interesting point on it is that look at who's giving what. So Trump is saying, yeah, we'll cut the fentanyl tariff from 20% to 10% for a year. But China's the one with all the cards. So China has agreed to buy soybeans from America. They buy half of the world's soybean production. So this is really, really important in the world. And importantly, it means that they're buying again from U.S. farmers, important for U.S. farmers. And Xi Jinping said that they will lift restrictions on the export of rare earths for a year. In other words, all the cards being played. I mean, you're sure Trump can drop his tariff, but the real cards are the soybeans, are the rare earths, and well, China holds those, not anybody else. So yeah, we'll see how that plays out. But for now, I think it's a little bit messy for the US president. I don't think he holds any cards in that regard. But let's get on to market crashes. I have over the last few months, I'm always meeting plenty of people, and I've been hearing from a lot of folks that they are worried about the market crash. Some have moved into cash, some went back into cash as far back as April and May, and they've missed all of this rally, and that's part of the trick. So let's start off by saying, will the market crash? Yes, absolutely, guaranteed. When will it crash? I and everybody else has absolutely no idea. Remember, bull markets climb a wall of worry. That's just how it rolls. There is absolutely a wall of worry that's happening. And that is just what we expect, in a sense, from equity markets. We always got hundreds of reasons. For example, the big one floating around on the internet a few weeks ago was that margin requirements were at record levels. Now, margin requirements are for traders, right? You've got 10,000, but you buy 50,000, and that 40,000 difference is margin. And margin is at record levels. Well, it should be, because all assets are at record levels. Cryptos, equities, bonds not so much, precious metals, gold, they were at records. So margin should be at record levels. That's not a scary thing. That's a function of a market. A lot of talk around credit card debt in the US is at record levels. Again, it should be. Why? Well, because the US is bigger than it's ever been, both in terms of population and GDP and economic activity. Credit card debt should be at record levels. Now, maybe it's 6 stigmas above where it should normally be, maybe, but it isn't. The short answer is it's a function of a growing economy, a growing market. That's why margin in credit card is at the levels. Now, there is every chance this little clip's going to make me look like a fool, and the market is crashing in the background, and I have effectively rung a bell. But the point is just that. We don't know, and we shouldn't stress it. And what I've often said to folks is that you're in cash waiting for the market to crash. Then it does crash, but it actually doesn't come back to the level where you went into crash. So you still went into cash. So you still pour it off. Also, when the market crashes, now you've got to call the bottom, and you're unlikely to get that perfectly well either. So, lots to worry about. Always lots to worry about. Yes, there are valuations in the US that in many cases look extreme, but not all of them. Yeah, sure. Palantir, what's it trading at? 86 times sales. Not earnings, sales. I mean, that is a ridiculous number. But NVIDIA forward PE is 35. That's not a scary number. Or the spending that we're seeing on AI infrastructure by the hyperscalers, the Microsofts, Amazons, Metas. I'll touch on Meta in a moment. It sounds terrifying, but they're doing it from free cash flow. This isn't like they're going into debt, except Meta. They're going to spend $100 billion next year, and $20 billion of that will be debt. That does worry me, especially seen as when Microsoft is building their AI centers, their data centers, when Alphabet's building them, when everyone else is building them, you can see what their business model is and how they earn revenue. We can debate whether it's any good, but I don't know what Meta's is. They don't rent data centers. They sell advertising. That's their business. I'm not thrilled by the Meta story whatsoever. So we know that markets will crash. We don't know when they will crash. If you are worried about elevated levels, well, then look at taking some money off the table. If you've got a high flying tech stock that is up, 10x, 20x, 100x, as the case may be, well, sell a bunch of it and take it into cash and find somewhere else to invest it. If you've been in gold and gold miners and had a spectacular 2025, take some money off the table. I've sold some of my gold stocks. Absolutely, I have. I'd look to get back into them. But the other side of the coin is, as I'm selling those stocks, I'm finding other things to buy. I'm not sitting in cash. Cash is an absolute drag. And to the point. And there's a great tweet here from Charlie Bello. You should give him a follow on the Twitters. There it is there. And he's talking around the bull markets. And the average bull market is 5.3 years and 254%. This is back from June of 1949 to June of 2025. The average bear market is 1 year and down 31%. And the bear markets are scary, and some of them have been massive. We've had the financial crisis, 0809, 55%, .com 47%, the 72 crash down 45%. There are absolute big drawdowns, but they happen quite quickly. And the winners, the market in the run up to the .com was 841%. The post financial crisis was 527%. This is S&P 500. The post pandemic run was 120. Then remember, we got that bear market in 21-22. Since then, up 78%. The numbers just say that unless you are in retirement and living on your money, different story. But if you've got time on your side, don't stress the crashes. And you think you can be clever, sell at the top, buy at the bottom, rinse and repeat, quadruple your money. Doesn't work that way. Just doesn't work that way. I did earlier in the year, there it is, Anatomy of a Financial Crisis, 1987 to date. What happened, what changed, and what I learned. That from the 4th of June. You'll find it on the stream or on the justonelap.com website. Just go search for Anatomy of a Financial Crisis. You will find it, where I go through all the crises from 87, what drove them, what caused them, what my response was, and many times my response was the wrong response. It took me a long time to get to this point where I can sit here and say, yeah, market crashes don't scare me, because truthfully, they are scary when they happen. Let's be very clear about that. There is no fun when a market is crashing, but it isn't the big sort of world-ending thing that we typically seem to think. And certainly don't try and time it, because yes, there is, bad news. There are reasons to be worried. There always is. I said it already. Bull markets climb a wall of worry. That is just simply how it rolls. But we'll leave it there for now. I'm going to go head off. The market is about to open. Let's check what we've got. If we've got some numbers on Optasia. So Optasia is looking to open at 1990, although to be clear, it is 45 seconds into that opening auction. We're still half an hour from the market opening, but looking to open 1990, up from the 1938 close of yesterday. So maybe we're going to get some more bounce coming through there. Time will tell. As I said, I hold it, and I'm going to look to build up in my position because I only got 14% allocation. Worldwide markets powered by Standard Bank Global Markets Retail and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Shyft. Thanks to Standard Bank. If you are a client, go and check out that video, justonelap.com/power hour. And if a lot of folks are saying, well, but I haven't been told. That's because you're not in the group that's currently being migrated, because they're still moving features into Shyft. That bunch will happen next year. Probably not Jan or Feb, maybe March at the soonest, but we'll get more details of that in time. But we'll leave it there for now. My name is Simon. We'll chat again next week. As always, look after yourself, and if you can, look after somebody else as well. Cheers all.